6 investments that will change your life. Hi everyone, happy return. Today, we're going to discuss investments which have the ability to drastically alter your financial situation. Have you ever pondered what it would take to make a significant improvement in your financial situation? Are you prepared to learn about the investments that can put you on the road to prosperity and financial freedom? Investing may be intimidating, particularly with the abundance of options available. But fear not, we are here to make things easier for you. We'll reveal 6 wise investments in today's video that could completely transform your life. These aren't your average investing advice. These are tactics that can assist you in accumulating wealth, reaching your financial objectives, and securing your future. So stay put if you're prepared to take charge of your financial future and make wise investment decisions. Before we begin, remember to click the subscribe button to ensure you receive more insightful financial advice. Now, let's get going. Number 6, initial public offerings. Certain initial public offerings, IPOs, like Snapchat's in the middle of 2017, draw a lot of attention, which might distort professional assessments of short-term returns and valuations. Less well-known IPOs can provide investors with an opportunity to buy shares at a deep discount to the company's current value, which can result in significant short- and long-term gains should the company's valuation be correct. Like with SAP, the majority of initial public offerings, IPOs, do not yield substantial profits or any returns at all. Conversely, cloud communications startup Twilio Incorporated, TLO, which went public in June 2016, raised $150 million at the $15 per share IPO offer price. Twilio was up 90% on its third trading day, and it was up 101% by mid-December. IPOs are dangerous because even when a company makes an effort to release information to the public in order to receive SEC approval for the IPO, there is still a great deal of uncertainty about whether the firm's management will carry out the responsibilities required to advance the business. Number 5, venture capital. Startups looking to raise money from venture capitalists have a fragile and unpredictable future. While many companies fail, a select handful can provide the market with highly sought-after goods and services. Subpar management, subpar marketing initiatives, or even an unfavorable location can hinder a startup's chances of success, even if its product is attractive. The lack of transparency in management's perceived capacity to perform the tasks required to support the business is one aspect of venture capital risk. Brilliant ideas from non-business-minded individuals propel many startups. Investors in venture capital must conduct further analysis to determine a new company's security. Some investors may find it difficult to meet the typically very high minimums for venture capital investments. Make sure to conduct your due diligence before investing in a venture capital fund or other investment. Number 4, foreign emerging markets. A great place to invest can be a nation whose economy is expanding. Investors can purchase government bonds, equities, or ETFs that track an expanding stock market segment, or they can purchase sections of the economy that are experiencing hypergrowth. China experienced this from 2010 to 2018. Economic growth spurts are uncommon occurrences that, despite their risk, can offer investors a plethora of new businesses to support their personal portfolios. The biggest danger associated with emerging economies is that investors may underestimate the length of the period of rapid expansion, which would result in disappointing outcomes. In nations going through economic booms, the political climate can shift abruptly, altering the economic structure that had previously encouraged innovation and progress. Number 3, REITs. Investors might receive large dividends from real estate investment trusts, REITs, in exchange for government tax benefits. The trusts invest in residential or commercial property collections. REITs are influenced by the broader economy, interest rate levels, and the current state of the real estate market, which is prone to booms and busts. This is because of their underlying interest in real estate enterprises. REITs are riskier investments due to the real estate market's extreme volatility. REITs have significant potential dividend growth, but the original main investment carries a significant risk. The riskiest REITs are occasionally those that give the largest dividends, which range from 10% to 15%. These investing options carry a variety of dangers, even if they may yield large profits. These investments need a combination of experience, risk management, and education, even if risk may vary from person to person. Number 2, high-yield bonds. High-yield bonds, whether issued by a foreign government or a highly indebted firm, can provide investors with exorbitant profits in exchange for the possible loss of principal. When compared to government-issued bonds, these instruments may be especially alluring in an environment where interest rates are low. A high-yield bond promising 15 to 20% may be worthless. Therefore, investors should weigh the risk of losing all of their money on their investments against the initial thought that reinvesting capital several times will double it. But not all high-yield bonds fail, which is why investing in them has the potential to be profitable. Number 1. Currency trading. Since traders and investors face a significant level of risk due to rapid fluctuations in exchange rates, it may be advisable to leave currency trading and investing to the specialists. To reduce additional risks, investors who are able to withstand the strains of currency trading should look into the trends of a certain currency before making an investment. Due to the interconnectedness of the currency markets, investors typically short one currency while maintaining a large position in another to protect their assets from further losses. Trading currencies, commonly referred to as forex, is a risky endeavor. The FX market permits a significant degree of leverage. Standard brokers provide 50-to-1 leverage, which, if not handled properly, might increase investment risk. I appreciate you looking. Remember to subscribe and like our YouTube channel.